Thank you for joining me on this video. My name is Rodney Constable. I am the president of Simple Market Signals, and I wanted to take this opportunity to do a little technical analysis with you on the S&P 500. The market just closed a little while ago. Today is Thursday, February 13th, and today was a little bit of a volatile day in the markets, but you wouldn't know it to look at where we finished, and that's why I think it's really important these days to wait until the market closes to really understand what's going on in the markets, and that's why I do these technical analysis videos at the end of the day for you, because it's really the closing price that is quite telling. And if you look here in the upper right hand corner of the screen, you can see we were down just 16 100ths of 1%. So I mean, less than 0.2 of 1%, guys. That's nothing. Okay. And the other thing I like to watch is volume, and you can see here in the lower right hand corner of the screen the volume bar. And today's down day was on lower volume than yesterday's up day. And so a falling market on lower volume is not a huge thing. However, when we look over here, let's go over and you can see where my cursor is. See that down day in September on high volume? That's the kind of stuff you want to watch. So a down day after a short period of rising stock market, and then you get a down day on high volume, that's the kind of stuff that matters. And then you can see the market fell and then started to recover after the volume fell. But today's down day, just down 16 100ths of 1% on lower volume, it's not that big of a deal. But just to give you an idea, I'm going to switch over to a 2-day 1-minute chart. So very volatile, I know, to look at, but this was Wednesday's action, and each one of these little squiggles, these little candlesticks, that's a 1-minute chart. So what we're looking at here is an intra-day chart for the last 2 days on the S&P 500. And what you can see here is today we opened at the low, and on more fears of the coronavirus, right? And there's more people, unfortunately, that have passed away. This virus continues to spread. So there was some negative news that came out of China overnight, and that spooked the market, and the futures were down. We opened at the low, we climbed up, and then just a little after 10 a.m. Eastern Standard Time, we kind of did a double bottom on the chart. So again, this is a 2-day 1-minute chart. I'm going to switch over to a 1-day 1-minute chart so you can kind of get a little bit of a better view as to what happened. So again, this is today. This is Thursday, February 13th, 2020. This is an intraday look at what happened. So each one of these candles is 1 minute in the S&P 500. And you can see here that we opened at the low and then climbed out of that and then kind of did a double bottom. And then you can see that we actually got positive for part of the day, just shortly after noon, actually for 1 or 2 minutes, about 11:30, 11:40, and then went positive, negative, positive, and then shortly after 3 p.m. Eastern Standard Time, then the market kind of sold off, and we finished the day at 3,373.94 on the S&P 500. So, sometimes I think it's, I like to, I'm a geek on this stuff. I love it, right? So I like to look at an intraday chart to see what's happened in the middle of the day to really get some perspective. And then the other thing I have for you here is a 5-day 5-minute chart. So each one of these candles represents 5 minutes in the S&P 500 over the last 5 days. So again, over to the right, where you see my cursor moving, that is Thursday, February 13th, 2020, and you can see here that so there's Thursday, Wednesday, Tuesday, and then Monday, and you can see here that we kind of gapped up on Tuesday, and we've somewhat been going sideways here. Let's maybe annotate this chart to kind of get an idea of maybe we'll do some trend lines here, just to have a little fun on our shorter term chart. But you can see the bulk of the trading, a lot of the trading has been done. Picked the wrong trend line, pardon me here, guys. Let me get rid of that, and I want a horizontal, not a vertical. And we can see that a lot of the price action has been happening above this 3372, kind of right in that area, right? And then on the top end, somewhere, let's just call it, you know what, let's just move this to 3370 and 3380. So you can see a lot of, especially the last couple of days here, I got an extra line in there, so forgive me, but you can see a lot of that's been around that 3372 mark even today. But 3370 to 3380, a lot of movement there for the last couple of days. And so that could be an area to watch. You can see it's kind of the thick area for the last 2 days, 3370 to 3380. So to the degree that we kind of stay above that in the short term, that could be very positive. Click out of here and get rid of those lines. And then going back over to the 1 day chart for the last year, let's go ahead and kind of take a look at some short-term support and resistance lines. So again, we've already seen that 3370 area. When we really look at the intraday charts, the 5-minute charts, we can see that is going to provide some short-term support. But let me open up my annotation capabilities, and let's do the same thing, but let's look at the 1 day chart, which is a little bit more traditional and a little bit easier to kind of see what's going on. But we can see that, the last few days we've kind of stayed above that 3360, but I'm going to pull this back down here, and 3340 is going to be critical. We can see that we've been above that really for the last 4 days. So 3340 is kind of your shorter term area of support, and then if we put it around 3330, you can see that 3330 has really been kind of the primary area of support. We got right up to that area for a few days, broke beneath that a few weeks ago, and then bounced right back above it. So the 3330 area is going to be extremely important. And then you can see that the next level of support is going to be somewhere around this 3300 level. We traded above it, broke, and then again got it back above it, and that's the green line here. That's the 20-day moving average. So that would be some shorter term things for you guys to watch. As long as we stay above the 20-day, obviously there's really nothing to worry about. That is completely normal. But this market has just been absolutely unbelievable, and just ran some calculations for you guys before I fired up this video. And we're up since the beginning of October, going back here, we are up right at 16.75%, so over 16.5% on the S&P since the beginning of October. So it's just been an absolutely incredible run, and it's like nothing phases this market. We've had a president impeached, we've had the coronavirus, and all we've done is broken the 20-day moving average a couple of times for just a few days. And the 50-day is this blue line. We we really never. We kind of came close to the 50-day moving average here a couple of weeks ago, but we really never broke that, right? We haven't broken it. We've been above the 50-day moving average since really the middle, just before the middle of October. So it's been an absolutely incredible run here. And the other thing I've been looking at. Let me get rid of these annotations here. The other thing I've been looking at, though, and just something to keep in mind, is we are trading, if you can see where my cursor is moving, we're trading 11.34% above the 200-day moving average, and we haven't been down to the 200-day moving average since back in June. So again, it just shows the strength of this market. It's not anything to be too concerned about right now, but if we get something else thrown at this market, it would not surprise me to see us pull back at some point in the not too distant future. And guys, I don't have a crystal ball. It could be another few months before this happens, but at some point I would, it wouldn't surprise me to see us pull back somewhere towards this 200-day moving average, which currently is setting at 30.30. So that would be another area to watch. And then, but prior to that, of course, there's other support levels that will come into play, and let's kind of annotate those. So we have, we've already looked at the shorter term areas of support. We know 3,300 is one of those areas, and then you can see there's a lot of, there was a lot of trading right here around this 3240 area where the market came up to it, kind of bumped its head against it, poked its head above, couldn't get above it, and then once we got above that 3240 area, it's acted as some support. We had 1 day below that, and so again, you can see that 3220 even becomes a higher a thicker area, a better area of support. So, somewhere between this 32.20 and 32.40, quite a bit of support in the short term. And then as we go down, we have another area here at around 31.20. So somewhere between 3100 and 3120. And in case you guys haven't ran across this data before, round numbers oftentimes, not always, but oftentimes act as support and resistance levels. And there was a legendary trader, his name is Jesse Livermore, from over a century ago. And if you've never heard of Jesse Livermore or don't know much about him, and you're a trader, geek like I am in the markets, I would encourage you to go out and do some research on Livermore, because he was a very interesting character. But he over a century ago wrote in some of his notes that he took on the markets that he noticed that round numbers on individual stocks and the indices acted as support and resistance levels oftentimes on stocks. So if stock is trading at 97, it might bump its head up against 100 before breaking through, and then that 100 area becomes a psychological area, right, for a lot of people. And you can kind of see that around this 3100 level, where the market had traded up to it for a few days and finally broke through it, and and that 3100 then acted as an area of support, went down below it for one day, but we've been above that 3100 area since the middle of November, since we finally penetrated that, other than just one day. Okay, so little tidbits for you. Now, if the 3220, 3240 area, and I like to draw kind of areas, right? So I mean, there's 20 points right there. Sometimes it's not exact, but this gives you an area to kind of focus on. Same thing here, 3100 to the 3120 area. You can see a lot of trading. So that area may not be exactly 3100, but that area should act as level of support, and we can even break it down to like the 3080 area, and you can see that there's quite a bit of trading in that area. So each one of these areas should provide support if the market starts to fall, okay? And then you can see a much thicker area, much greater area of support around that 3020 area, which right now is just barely below the 200-day moving average. And again, 3,000 would provide much more support than even the 3020 area. So these are different support levels. When and if the market does pull back this far, then we should probably see the market come down to these areas at some point. I would not be surprised to see us pull back to the 200-day moving average. But again, the way this market is acting, it could be months before that happens. So this market has been incredibly resilient. So hope you guys have enjoyed today's market analysis, technical analysis on the S&P 500. Again, this is Thursday, February 13th. My name is Rodney Constable. Please subscribe to my channel, give me a thumbs up, leave a comment on this video, and I look forward to seeing you in the next video.